A fake out in trading is something that'll trick you into making you think the markets are going to go into one direction, which would get you to enter sells, for example, only to find out that it really wasn't going to sell off and completely reverses on you as soon as you enter that trade. So this is an example of a fake out. You can see here that we've closed above support, and then the next candle here on NASDAQ, we actually had a nice close below support, right? So when you take a look at that closure, this is a perfect entry for entering sells. But now that you can see price action came right back up. This is what a fake out is. You take an entry for sells thinking it's going to continue lower, but it ends up coming right back up and you take a loss in those sells. It's very similar to being on a football field, right? If you think someone in front of you is going to go to the right or to the left and then they juke you and they go that way, it's a fake out, right? The markets do the same thing. What are the reasons for fake outs happening? Like, why do they happen? One of the things that I would contribute fake outs to would be timing, like understanding when to get into the markets at the right time. For example, if it's 4 o'clock Eastern time in the afternoon and the market's just closed, but you're only paying attention to technical analysis, so really technical traders are only looking for candlestick breakouts for the most part. So if you see a candlestick breakout, for the most part, almost every hour of the day, you're going to see something that looks like a good trade. But if you don't understand the timing of the day, or if you don't know that there might be important economic data coming out in like 5 minutes, you end up getting what would be called a fake out. You take a trade when you shouldn't have taken a trade just because you see a random candlestick break out of a support or a resistance area. And if you don't have the timing of the markets, or if you don't understand when the market's open, when data's coming out, if there's any central bank or political speakers that could impact the markets, stuff like that will end up causing you to get faked out. So how can you identify if this is going to be a fake out or not when you're trading? Let's say inflation data is about to be released and we're watching NASDAQ, and the first thing I'm going to do, I'm going to look at my news feed, I'm going to look at my news terminal, I'm going to look at my economic calendar, and I'm going to say, okay, inflation data just came out. Did it come out higher or did it come out lower? If it came out higher, this is a good entry because, like I said, higher inflation would push NASDAQ lower. Perfect entry. But if inflation came out lower, and I'm looking for NASDAQ buys, but NASDAQ drops, that doesn't make any sense to me. That's how you avoid fake outs, is by understanding the things that are happening in the markets and how it should impact whatever asset you're trading. You can apply this to gold, US dollar, US 30, the Great British Pound, any currency, it doesn't matter. Economic data will have an impact. And if you know, or if you understand with a higher probability how it's going to impact it and the direction it should go in, you don't enter trades when the data and price action are not aligned. This doesn't mean that I'm not paying attention to technicals. A lot of people get this confused because they think, and I want to talk about data and fundamentals and geopolitical events and all this stuff, that I'm not actually looking at the charts to take my trades. Like I just explained before, if inflation comes out lower, I'm watching NASDAQ price action. I'm waiting for a break of support or a break of resistance, following my bias based on the data. So understanding the data is just one piece of actually taking your trades. You still want technical analysis. I still need to understand how to draw support and resistance. I still need to understand market structure. I want to know these zones because I need a good stop loss, I need a good take profit, and I want a good risk to reward so I know that I'm not entering in between a range. I want to enter at specific places. Technical analysis is 100% important, but understanding how to create your bias on the direction of technical analysis is going to come from fundamentals, geopolitical events, and sentiment analysis. Think of it like going to the gym. If you're in the gym and you're doing a bench press, for example, if you don't understand which muscles to use or engage when you're working out, two things can happen. Number one, you're not going to make any progress because you're not working the muscle that you're actually trying to grow. Number two, it's very likely that you can get injured. If you're going too heavy, you're using bad form, tons of people in the gym, I'm sure you guys have seen it, get injured all the time because they don't understand what they're doing, what muscles to use, and proper form on all of this stuff. If you don't understand the things that are causing something to happen, then you won't get the result that you want. Here are some of the steps that I take to avoid getting a fake out. One of the first things when I'm trading that I want to pay attention to is I want to know if there's any economic data being released for that day. The second thing is I want to know if there's any central bank speakers coming out or talking. This is important because if I do see what looks good to me for a technical entry, I want to know, is there data about to be released or is there a central bank speaker about to speak? Now, granted, sometimes speakers will come out unannounced. That's why I have a news terminal. That's why I pay attention to the news feed at all times. But those are the first two things I'm going to be paying attention to. Now, if I see a break of support on NASDAQ, for example, and it looks like a good reason or a good area to take sells, the first thing I'm going to ask myself is, why is NASDAQ dropping? Does this follow my overall bias? Am I bullish or am I bearish on NASDAQ? Basically, am I looking long-term for NAS to go higher or to go lower? The reason this is important is because let's say there's no economic data coming out and there's no central bank speakers. If we're just looking at technical analysis, which you can still take trades with just technicals, but if there's no data coming out, I want NAS or whatever I'm trading to follow my bias. So if NASDAQ does pull back, I'm just looking for pullbacks to enter buys and follow the overall bias. The only time I like to go against my bias is once, like I said, if there's economic data coming out and something causes NASDAQ or gold or whatever it is to drop, that's when I'll take that trade. And even then, a better way to identify if you're looking for a short-term trade versus long-term trade is understanding the economic data that's coming out or whatever the reason is for your trade. An example of something that would change my bias would be September 20th when the Feds had their rate decision, 2023, their last rate decision, Jerome Powell came out and specifically told the markets, we are still willing to hike more rates. This gave me an automatic bearish bias for gold, and I held my gold sells for 3 weeks. So the reason is higher interest rates is going to cause the US dollar to gain strength, but it's also going to cause gold to be pressured to the downside. So I'm looking to take gold sells based on the fact that Jerome Powell came out and said, we're still willing to hike more rates. Now, like I said before, I'm still waiting for my technical breaks to take those entries. I'm not just going to randomly sell gold because I think it needs to drop. I want to see the markets actually confirm that, and then I'm taking those trades. I held it for about 3 weeks. My bias changed completely, and ever since then, on October 6th, when the war started with Israel. When that war started, it completely changed the direction of gold, and that's when gold shifted to the upside. Number one, geopolitical events is going to be bullish for gold because market fear is going to trigger gold to act as a safe haven. What that means is that investors typically like to pull their money into safe assets when there's volatility, right? So they take their money out of risky things, put them into safe things to protect their money. Gold is a perfect example of a safe haven. So you see gold go to the upside. Now, as a day trader, I just want to enter buys on gold and follow the trend based on geopolitical tensions. I didn't get faked out by random candlesticks pushing up or down. The actual announcement of the war was the reason for me to change my bias. So to recap, to avoid getting faked out, the first thing you want to understand, is there any important economic data coming out that could impact the thing that you're trading? Number two, are there any central bank speakers coming out that could also impact the thing that you're trading? Number three, do you have a bias? Do you have a macro bullish or bearish bias on whatever it is that you're trading? Number four, all you need to do is mark up your technical analysis, set up your zones, and just wait for your alerts to get hit off at those zones and take your trades as long as it's following your bias. The only times I like to take trades if it's going against my bias, like I had said before, if you have a reason to change your bias. That's the only time or the best time that's going to help you avoid those fake outs. If you have any questions, there's any confusion, put it down in the comments below so that way I can answer. Make sure you like and subscribe so that way the YouTube algorithm can show you when we have our next video up. I hope you guys have some profitable trades, and I'll see you in the next video.